Hello everyone and welcome to Candriam's Coffee Break. Today we'll explore how shifting geopolitical tensions and macroeconomic uncertainties are influencing markets and shaping our asset allocation. The global economy is treading a fine line. While the US and China have agreed on a 90-day tariff rollback, uncertainty remains high. Global growth is slowing, manufacturing PMIs are softening, and inflation data remains mixed. Meanwhile, the conflict between Israel and Iran has led to a surge in oil prices, adding more pressure. As shown in the Economic Surprises Disconnect chart, we're witnessing a divergence between soft and hard data, a rare but telling sign of market fragility. This environment calls for active management and close monitoring of shifting geopolitical and macroeconomic regimes. In global equities, our positioning remains neutral. We're cautious, as valuations are high and policy uncertainty persists, particularly in the US and Europe. However, we continue to see strong momentum in technology globally and positive prospects in sectors tied to fiscal support, such as European infrastructure and defense. The balance of risks doesn't justify an overweight just yet. In bonds, we have a positive outlook. In Europe, we maintain a long duration in core sovereign bonds and favor investment-grade credit, supported by solid fundamentals. We are more cautious on high yield due to tight spreads and limited risk premiums. In the US, we hold a neutral stance on treasuries and maintain preferences for investment grade over high yield. Finally, our view on emerging market debt, both hard and local currency, has improved, driven by attractive real yields, easing trade tensions, and improving fundamentals. This has led us to upgrade our exposure from slight underweight to neutral. In currencies, we hold a neutral view on the euro and the pound, and a slightly cautious stance on the US dollar, which remains historically strong. However, as Fed rate cuts are expected in the second half of the year and US growth weakens, we anticipate depreciation. We maintain an overweight on defensive currencies such as the Japanese yen, and see opportunities in select emerging market currencies where real yields are attractive and fundamentals are improving. Thank you very much for your attention. We will continue to monitor these events and adjust our strategies as necessary.